Good evening, everyone. Time for another silver update. This is the 1-minute chart of silver provided by netdandia.com. You can click on the link below. Now you can see we had a nice little gap down on the open, and we are already starting to rally. You can see that gap down right there. It kind of came up to try to fill it, and then it collapsed. Now we've come up and filled it. That's the typical type of thing that you get when you're going to turn down. Markets don't like gaps, and that's because there are stop orders in the market that don't get filled, and that means there's floor money to be made. So the floor traders like to run the stops. So it's quite possible we will turn down now at this point, now that all these gaps have been filled. That's about a 30-cent move down and up, so that's about 1%. Of course, silver's more volatile than any other market, and I've covered that many times. We know the reason why, because it's the most manipulated market. So let's take a look at Apple Computer. That's one I've been following. It's very important because for an emotional type of play, Apple Computer is the top stock out there for the technology, this echo boom that we have, kind of like the NASDAQ bubble. This is the second echo wave of that bubble. You've got Google, you've got Apple, you've got a number of others, but you can see that Apple is in a very, very bearish situation here. If we draw the lines here, let me take that out and go straight to the freehand lines. But if we go to the lines, we can see that we're approaching a potentially serious breakdown, and there's not a lot of support if we get down below this. We'll call this a neckline, although this isn't a traditional head and shoulders top, but you can see there's a lot of area to go before we get down to this line here. So 424, that's going to be the long-term price target. Short-term price target is going to be 525 or so. As I pointed out before, Apple is clearly a bubble. It's not a matter of whether it's a good company. Good companies and bad companies get into bubbles. What makes a bubble is that there's a tremendous number of people piling on simply because the price is rising. You could have the greatest fundamentals in the world and still have a bubble because too many people get involved and drive the price too high. The next one we want to look at is Google. Google had a tremendous drop at the end of the week, and let's go to the daily. You can see there were two daily moves. We dropped from 770 or so down to almost 700, and then another huge drop down. We're down around 680. So Google is also very vulnerable. It is not nearly as overvalued in the terms of price rise as Apple is. Apple has had an incredible run, so we're expecting to see a much larger drop in Apple. Now let's go over to the AGQ put that I covered. If you remember, I covered that when I saw silver break the trend line and thought that it might be a good time to pick up some AGQ puts. For the short term, I picked the November 2012 56. You can see we're at 690. It was $3 to $3.10 when I recommended it at 690. So that's more than a double. You can see it was up 46.81% on Friday, and if the move in silver actually follows through tomorrow, and we don't know if that's going to be a follow-through or we're actually going to get some kind of bottoming here. This is not unusual to get a bottom overnight in the Asian market. That was actually what occurred for me when I made probably the largest purchase I've made of silver. Was the 850 bottom in the fall of 2008, and we actually had that bottom. I remember it as if it was yesterday. It was about 5:30 a.m. In October. I don't remember the exact date. in the middle of the night, and we got a very, very low price and then a very, very high price. But and then we ran from there. But of course, APMEX and Gainesville had their prices locked into the physical price. Of course, we still had a big, big spread. I think the cheapest you could get was like $3 or $4 above spot. I think I got some buffaloes for $12.50. That was the cheapest I could find stuff. I didn't buy junk at that time. So you could easily have that sort of thing tonight and then just run up. But then again, it looks like we're rolling over. But the principle is this, that the people who control these markets, and we'll see that when we get into the main topic of the night about the silver devils and their manipulation. But the people who control these markets do not like the little guy to trade. They like the markets to trade when the little guy can't trade, and then they can make their major moves in off hours. We've seen that many times in the silver market. So let's get over to the questions of the night. Now, these are very deep questions, so I can't get very deep into them. I'm just going to cover them, just kind of a overview. This is a question I've received probably 10 times from people. It's about the recent James Sinclair. Dear Brother John, thank you for all your work. It has been a real education for me, and your site has been a big help. I think I live on it. You've posted several things on shorts and longs, but I'm still fuzzy on the subject when I have to explain it to another. Jim Sinclair's recent article that cartel shorts are really managed spreads confused me. I understood enough to feel that it confirms everything you and other silver bulls have said, but I don't think I could explain it myself. It's almost like Jim is saying the same thing, but from a different point of view. Could you do what you do best, explain what Jim is saying in layman's terms? Again, thank you for all your work. So let's go over to the Jim Sinclair article. This is the one on silver doctors, and I'm just going to cover a small section of this where Jim explains a little bit of what he did in the managed spread. He says, I owned a metals dealer here and in London. I made a cash market for gold. I know about what I speak. There might be outside of the gold banks less than 5 people who understand the big short that is always being screamed about by the so-called gold experts, and commitment of traders is a crock. You're looking at least 75% at a managed spread position. What happened at 1800, then at 1775, then again at 1750 was the long side of the spread was dropped, leaving the short side exploded, and the gold banks pounded the market to make 50% profit by putting back on the long side of the spreads, locking the huge physical longs versus the COMEX short into a no-risk position that leads a commitment of traders like the greatest short in human history. The same is true of silver. In this financially debased world, with the rules of a metals dealer company and a little help for standard financial fraud, and you'll never find this in the commitment of traders numbers. So what is he talking about? He's talking about these managed spread positions. Now, you have to understand how these things work, and we'll actually go back to this AGQ option, because this is a good one to use here. You know that the AGQ is an index, an ETF index based upon silver, which is based upon not the SLV, but we'll actually look at the profile here. So the investment seeks to provide daily investment results before fees and expenses that correspond to twice the daily performance of silver bullion as measured by the London fixing price for delivery. Okay, so what I was showing you was an option, and that's based on the AGQ, and that's based on the London price for fixing. And there's any number of things that can be derived behind that. So, and that's the word, derive. These are derivatives. So if you were someone who had sold me this AGQ put option, this 56, and it's already doubled, You may have offset your position in any one of the other calls, for example, or in the AGQ itself, or in the SLV, or in the physical market. So that's the idea about what Jim is talking about when he talks about a managed spread. A spread position is a position where you have both sides of the trade. So you may be long 1,000 contracts here and short 1,000 contracts there. Now, you have butterfly spreads in options. You have all kinds of spreads that you can do. But basically, it's a hedged position. It's a position where you're both long and short. Now, oftentimes when you get into those positions, you put them on in legs. So you'll put one leg down and the next leg down. And often when you exit those positions, you'll take one leg off and then take the other leg off. So if I happen to be short 1,000 silver contracts in 1 month and long 1,000 silver contracts in another month, then if I took the short leg off before I took the long leg off, that would make me net long. So that's what he's talking about. He's talking about the fact that these traders are they're legging out or legging in, and they're using that as an opportunity to make tremendous profits. And what he's saying is that because these are hedgers, the commitment of traders' numbers are not legitimate. They're not ways to determine who's taking what position. And you can think about that logically. If these people can hedge themselves through various mostly paper assets, whether that's the SLV, the AGQ, COMEX futures, LBMA futures, LBMA spot price, delivery, etc. There's any number of ways they can hedge themselves, and you don't know which leg they have on and which leg they have off. But the main implication of this is that at some point, these hedgers are going to leg out. In other words, they're going to take their shorts off. They're just going to simply remove the short leg of their position. And once they remove that short leg, that's going to leave them as naked longs. And if Jim is correct, then that will leave them in a position of reaping the largest gains ever. And that's because they'll be net long if the price moves to that 12,400. So hopefully that explains that. I can't go any further into that. It's a very complex subject, and we'll just leave it at that. So let's get to the next question. And that is from iDoc. All the wealth in the world. Hi, Brother John. After one of your prior silver updates, I was thinking about the total amount of wealth in the world. Assuming someone is wealthy because of how much money they have, and wealth is money, and money is matter, and knowing that matter cannot be created or destroyed, can I not assume that total wealth of the world today is exact or very close to the same wealth that has always been here since the beginning of time and money? Yes, the amount of paper currency can be inflated, but its purchasing power goes down accordingly, and creating more paper money is not creating more wealth. So the only true wealth, money, would be the precious metals. One may have a lot of land or oil or products, but it is not worth anything till it is sold for money and someone transfers their wealth, money, to the holder of the land, oil, etc. For example, a farmer produces apples. Apple makes iPhones, but they're not creating wealth for themselves. They're creating something, though, that someone else finds value in, and that person transfers some wealth, money, to the producer. Using this example, the only wealth creators I see are precious metal miners who slowly add to the global money supply. Even they are not creating wealth, just pulling existing wealth out of the earth. I envision this vast sea of wealth in the world being fairly constant, but just getting shifted around in different amounts to different places over time. Mike Maloney constantly talks about the greatest wealth transfer of our time coming up. not wealth creation or wealth destruction. When G. Edward Griffin talks about inflation, he says that through inflation, our purchasing power of paper money is stolen from us, but it is the government that is stealing it from us, and it gets it in this insidious way. It is not lost or gone forever, just transferred to another person, place. Furthermore, as our population expands over the years, the odds of each individual acquiring more wealth for themselves get smaller and smaller as the ratio of wealth population gets smaller. The Earth is a closed system. Nothing new is coming here from other planets, so total wealth must be constant. Am I missing something here? Well, a very long question, and the reason why I read the whole thing is because it has to do with the fundamental confusion between wealth and commodities. So yes, the Earth is a closed system and there's no new commodities, but commodities are not wealth. So you've got to understand that the wealth that exists in the world is what allows people to survive and exist. Fundamentally, you start with a farming economy where people measure their wealth in livestock and crops and things like that. As society progresses, you have people producing more than they can consume, and they begin to save that, and that's wealth. Now, as society progresses and you have industrialization and factories and automation, you find that you can produce a lot more wealth, or a lot more than what people can consume immediately than people need. So that's what wealth is. That's what capital is. That is the excess production from what is needed to be consumed. Now, the process of inflation, which is the situation we have with a fractional reserve system, whereas the Federal Reserve and our Chair Satan, Ben Bernanke, tells us that a natural rate of inflation of roughly 1 or 2% is a healthy thing. That is exactly the opposite of the truth. The natural thing that you should see is a natural deflation, which means that prices go down, and as productivity increases, then everyone becomes wealthier. Now, that would be the normal state of affairs if we had a unmanipulated free market fair system. Everyone would get wealthier and wealthier, and hence everyone would have to work less and less. So you would have people needing to only work 30 hours a week, or perhaps 20 hours a week, or 15 hours a week to maintain the same standard of living. But that's not the society and world that we have. We have a society and world where the bankers have created a system where they can expropriate the extra wealth created by productivity and technological innovation, steal that wealth to themselves, or for themselves, create a class of very, very wealthy people and a class of very, very poor people. And that's the situation we're in. So the world is getting wealthier. It's not, the wealth does not stay the same. What stays the same is the commodities, or they're actually reduced. But the total wealth of the world actually increases. In other words, the ability of less people to work for a living. You see the same thing with service industries. You have more and more people in service industries in advanced economies than you have in manufacturing and mining and farming, because the efficiencies in manufacturing and mining and farming make it possible for these other people to be involved in services. So that's the natural growth. That's the natural situation of an economy that is advancing. But again, the cancer on that society is the central bankers and the banksters who recognize that and use inflation as a way of stealing that excess wealth and giving it to governments and their cronies and their friends. So that's going to take us to the main topic of the night, and that's going to be the Silver Devils. And what I'm going to do here is review an article from Charles Savoy. This is on David Morgan's site, silver-investor.com. Now, I'm not. I don't have any doubts in David Morgan and his integrity, but as many have seen in the past, some people in the community have been attacked. So I would encourage everyone who can to go ahead and mirror David Morgan's site and make sure that these Charles Savoy articles are preserved for the future generations, because these are very, very important historical documents that Charles Savoy has created. And it would be a shame. I haven't gotten around to it myself to mirror this site. I will do it as soon as I can and save all of these PDFs. But I encourage you to do so if you haven't, because Charles Savoy has documented a history here that very few have taken the time to do. So I'm going to read the section of this, and the Charles Savoy PDFs and articles are very, very long. It'd take years of your life to study everything he's done. But this is about the origin of the Silver Users Association. These are the Silver Devils, and it's very important to understand what the Silver Users Association has done and why they exist. I've referred to this in the past. You've got to understand that, and I'm not going to get into Tinfoil Hat Sunday, I've already addressed that today, but silver is the people's money. I've already talked about Oz, I've already talked about L. Frank Baum, I've already talked about the planned destruction of America, the British influence, the Vatican, the Jesuit influence, and the influences in Europe that have for many, many years tried to destroy the American system, because the American system is a free market system. It's a constitutional system. It's a system. It is the only real system that has enshrined liberty in the history of the world, and therefore it is the target of these nefarious groups. But the Silver Users Association is an association that has made sure that silver has always been underpriced and always been available for them to use up, and hence we have the situation where it's my projection that silver will basically be destroyed. And when I say that, what I mean is that if the price of silver is ultimately forced so high that it goes to parity with the price of gold because so much silver is used up, then in essence, you don't have silver anymore. You only have gold. So then you end up with the FOFOA type of situation where this is what the bankers tried to do by demonetizing silver in the first place, and that becomes the end game. And that's a situation where you only have one metal. You don't have a bimetallic system. You have this unimetallic system where the bankers only have to gain control of that metal, and they control everything. So let's look at the history of the Silver Users Association and Charles Savoy. Read this real quick. Senator Sinclair Weeks, 1893 to 1972, was the driving force behind the founding of the Silver Users Association in 1947. There was a DuPont connection, as we shall see. Weeks was the son of John Wingate Weeks, a Republican congressman from 1905 to 1913, and a senator from 1913 to 1919 who voted for the Federal Reserve Act. The senior Weeks became Secretary of War in 1921 through 25. Sinclair Weeks was treasurer of the Republican National Committee from 1941 to 44 and remained on the committee until 53. He was a director of the First National Bank of Boston, now Fleet Boston. Remember, this was written in 2003 before the Silver Bowl started, so this even gives more credibility to Savoy. Now Fleet Boston, a Silver Users Association member, and was president of the Reed and Barton Silversmiths beginning in 1928, age 35, and held that post into the early 1950s. An overseer of Harvard, Weeks was also president of the Sterling Silversmiths Guild of America, special interest stuff indeed, with Weeks eyeing the billions of ounces held by the U.S. government at the close of World War II. He was also a director of the National Association of Manufacturers, establishing a likely cooperative relationship between the two. In 1953, Sinclair Weeks became Secretary of Commerce, a post he held until 1958. According to this site, General Motors, Standard Oil, California, and Firestone controlled national city lines, which by 1946 controlled streetcar operations in 80 cities. By 1955, over public protests, National City closed down almost all these operations, eliminating a public transportation network that later would cost hundreds of billions of dollars to replace. A federal antitrust investigation yielded indictments and convictions for some GM executives, yet the company was fined only $5,000. GM was behind the founding of the National Highway Users Conference. The plan apparently was to encourage sales of motor vehicles and the fuel and tires with which to operate them, and in so doing, public transportation was squelched. In 1953, GM President Charles Wilson became Secretary of Defense and said that new highways were vital to national security. While we all need a highway network, it is the manner in which it was pursued which could be questioned. At this time, the Commissioner of the Bureau of Public Roads of the Commerce Department was Francis DuPont, whose family, in addition to holding controlling interests in the chemical giant DuPont Silver Users Association, was also controlling faction in GM. Commerce Secretary Weeks, founder of the Silver Users Association, supported passage of the Federal Highway Act in 1956, which appropriated $25 billion for expansion. The bill was introduced by Senator Albert Gore Sr., so even if Gore beat Bush in 2000, the DuPonts might be in that background too. Before leaving the Commerce Department, Weeks appointed Philip Reed to some committees. Reed was a director of Tiffany & Company, Silver Users Association, and headed General Electric from 1945 to 1959. Reed was with the War Production Board in World War II and was assistant to railroad heir Averell Harriman, who was ambassador to Great Britain, married into the Churchill family and the Soviet Union. Reed was a delegate to the founding conference of the UN at San Francisco in 1945, director of the CFR from 1946 to 1969, chairman of the Federal Reserve Bank of New York from 1960 to 1965, and a director of the Winston Churchill Foundation of the U.S. His personal papers are on repository at the Hagley Museum and Library in Wilmington, Delaware, whose main benefactors are the DuPont family. More about the Silver Users Association. This organization is long since out of touch with reality. Where silver prices are concerned, they carry on as if it's still the year of their founding, 1947, when silver was extremely abundant and cheap. Founded to get America's silver stockpile at giveaway rates, they succeeded completely. Now, due to leasing of silver, world central banks appear to be depleted of silver also. They've made noises indicating they want India's silver, and they have enlisted corporations around the world to assist their lobby effort to change Indian law to permit export from the domestic Indian market. As of the last CPM annual silver survey, India was holding firm against silver exports. This is old news, etc. Still, the Silver Users Association says they, quote, support government policies which ensure the flow of new production of silver to the market. How does that fit in with keeping the price so low for so many years that mining activity is squelched and production curtailed? What sort of government policies to support the flow of new production silver to the market would they promote while holding inviolate their notion of dirt cheap silver? Nationalization of silver mines and exploitation with free convict labor. They additionally state their alleged wish that accurate silver market information is disseminated. Accurate information by whose criteria? This goes to show the justifiably cynical onlooker that the way you destroy someone is by manipulation of definitions. This could be extended to any struggle imaginable. Example, and I'm not going to get into that. I suppose the typical silver investor in the Silver Users Association's view is afflicted with permanent mental hallucination, or rather, the SUA will be so afflicted when silver prices can no longer be managed to the downside. Now, this is written in 2003. Here's a line for SUA officials to claim as their own in the fast approaching environment of sky-high silver prices. And he goes into a historical quote. We'll skip that. The Silver Users Association also states that it cooperates with government agencies, meaning especially the CFTC, an infested hotbed of subversion for silver shorts. Now again, This was almost 10 years ago, and he called the CFTC for what they are. An infested hotbed of subversion for silver shorts to reduce excesses in silver speculation. The first thing you pick out of their blather here is allusions to the Hunt Arab silver play. Okay, so the backward, pot-bellied, T-bone steak-eating hicks from the Texas cotton patch and their camel-riding, dromedary, date-eating Arab partners tried to squeeze the market to force a price rise by removing metal from availability. But we know they were squashed like a boot heel on a tater bug by the shorts and their buddies, the exchange officials, including Andrew Brimmer, who in January 1980 was director of DuPont, SUA member. That issue is long since past. The issue now is SUA has had its way so long with low silver prices that the great hungry silver god, as Butler called it, has devoured all possible low-priced silver. The rest of the silver is held by persons and entities waiting for the SUA and the COMEX shorts to be knocked off the stage by market forces, unserviced demand, at which point their silver will become available in a free market situation bidding auction. To SUA members, this is like going on a diet of molded hamburger buns, etc. He loves his analogies. Can the SUA account to Congress and the Justice Department why they're the only commodity users association in existence, and why, in the view of all the anecdotal proof visible that they are constituted to hold silver prices low, that this doesn't make them guilty of antitrust violations of price fixing on the short side? It's incredibly scandalous that this organization has played its gnawing termite role for so many years, and that gives members views to Congress and the administration and maintains liaisons with U.S. government executive departments, etc., etc., etc. And he goes on to ask why there isn't a silver producers cartel. If there had been a silver producers association working to raise the prices of silver over the years, you can bet it would have been headquartered outside the U.S. like De Beers. A short-side circle of interest is something they're not conditioned to even think about, just like most of them cannot understand how to make profits by shorting a stock, commodity, or index. So he goes on and talks about the SUA and all of these companies involved. General Motors, Ford, Lockheed, Northrop Grumman, Rockwell, General Electric, and these other big members of the Silver Users Association. So we can see that these silver devils, and again, Charles wrote this in January 2003, the Silver Devils have managed to destroy all of the above ground silver by using it up at very, very low prices. We are now in a situation where the U.S. Mint, which is responsible for minting Silver Eagles, is going to be forced very soon, if not already, to import the silver required to produce these Silver Eagles, which is required by law. And the Silver Users Association has succeeded in running out, causing the entire world to run out of silver by having it thrown into landfills and no new silver being mined because the price is too low. So they've effectively destroyed silver. They've gone beyond their wildest dreams. Why? As again I pointed out, the purpose is to destroy the people's money. If you can make the silver price ultimately trade at a one-to-one price with gold, then effectively at that point there is no more silver, there's only gold, and then at that point we enter into a free gold situation, and the people holding the gold / silver are the ones that make the rules, and they don't plan that on being you or any of your friends. So it's your opportunity now. As Greg Manarino has often pointed out, you need to become your own central bank. And silver, buying silver now, if what I'm saying is correct, you're actually buying an ounce of gold for $32 an ounce, and that is the deal of the century. And we'll talk to you next time.